Welcome to the Cincinnati Real Estate Home Show. I'm your host, Tom Giusti, with EXP Realty and the Lowry Team. And here's my co-host,
Phil Knabe.
Phil Knabe. What's going on, Phil?
Crazy stuff. End of the month. You know how financing gets.
Yeah, you're a bit busy while like running around here like a chicken with your head cut off, trying to close deals.
Yeah, you know that's how it is. I mean, the fun stuff that always pops up at the end always makes everybody so antsy. So I get all those issues.
So while we're on that, why don't you tell us about what some of those issues are that we can, some of the homeowners that are buying homes can kind of expect maybe some things that could go not wrong, but could some things you could go up against challenging ways.
On the finance side, things pop up like quality control because everything gets audited nowadays. So you could literally have a clear to close and it's going through, and then that audit comes in, and then they see something that's not 100% correct. Mm-hmm. And it's always based around keeping that borrower protected. So that's the real issue on time is, it doesn't always cycle through. Sometimes there's a post-audit or a pre-audit, and they get selected. So those is where, everybody's moving so quick and everybody's doing their job. So there's always something that pops up at that last minute, and you're like, oh, well, why didn't we know that at the very beginning?
Right.
Well, not always do we see all the information at the very beginning, and that's where that wrench comes from.
So who is doing the audits?
Well, we do, a lot of times we do them internal. There's some companies that are out there that you can pay to have them internal audit. So it really depends. But we try, here at Option Financial, we try to really audit our stuff from the get-go. We try to really stay, we have fail-safe systems. We have all these things in here to make it flow how it's supposed to. Mm-hmm. When you're closing in 15, 18, 21 days, that's chugging along when an appraiser takes 7, 12, 14 days.
Right.
So you're moving pretty quick. And again, you send out for information, the information comes back, you got to make sure that it's accurate. There's a lot of fraud out there, so you got to protect everybody involved. So
yep.
It's not as easy as looking at it and be like, oh yeah, perfect. Oh hey, your W-2 matches your taxes. Great. It's just not that easy.
It was that easy in 2003, 4, and 5, wasn't it?
Yeah.
There's a lot of moving parts when it comes to buying a house. I don't think a lot of people realize when you're getting a loan, behind the scenes can get, not for you as a buyer or as a borrower, it can get kind of chaotic. Yeah. Because we're just trying to do the best job that we can for you. So Phil's trying to do the best job he can for you. It's
an A to Z process, but every A to Z is different. Yeah. And that's what's crazy about it. You'd think it would be down to a science by now. Technology has helped quite a bit, but when you have discrepancies, you got to fix the discrepancies. And a lot of employers don't know how to fill out the verification of employment properly, so it doesn't match the data. Well, that's a red flag. That generally costs 2, 3, 4 days. So, those are the things, that's where your hurdles start to come in. So the smoother the deal, the more prepared you are, and that's where the loan officer really is important. You get a good loan officer, they're really building that file to where it's complete, and pre-approved letters, those things are a dime a dozen. Yeah. But the good ones, they don't come in 10 minutes. They get the information, your pay stubs, your tax returns. You're getting all the information. You're verifying the information. So when I send out a pre-approval, it's basically pre-underwritten, and we're in the game.
Very cool. Very cool. Yeah, that's why it's so important that you get with somebody that you can meet with face to face. I know we have a lot of those online lenders.com. Not going to mention any names, but where you never meet or see anybody. So when you have a problem come up, you just don't receive a phone call. So find a good loan officer, find a good real estate agent that you can work with, such as myself, with Phil, and you'll be taken care of every step of the way.
That's one of the biggest things we do is we take care of our clients. That's
good deal.
No ifs, ands, or buts. That comes first.
I think we've said that throughout the last
30
2
years
podcasts.
In the industry. So. You don't do that for this long and not take care of your referral partners and take care of your clients. So
very true. Yeah. That's a good point. So we're going to come out with our market update. There's really good news for home buyers. People are saying, what's that? Well, there's more listings that are coming on the market. Yeah. Well, more listings. I think we talked about this last week, which means more opportunity for buyers. Yeah. You have we're seeing pockets in Westchester and Fairfield, Middletown. Even in Liberty Township and Hamilton are opening up with with more listings that are coming on the market. I don't have the exact numbers. Last week, MLS was not giving me those this morning, so I couldn't pull those off. But we're seeing more on the market, so that's a good thing.
I think it is. We're coming into the summer months. It's time to move. The weather's broke.
Yeah.
It's time to buy and sell.
Yeah, and I don't think prices are coming down any. We talked about that as well. But that, you know, there's a lot of noise in the real estate market today. A lot of doom and gloom. You're going to hear from NBC, ABC, all those, you know, 3-letter digit, whatever you want to call them, news agencies. Just talk with your agent and make sure they're working for you, because you know, it may be challenging to find a home that you want or that you like, maybe in your price range, but it's not impossible. And don't give up. That's right. That's my message to you. Don't give up. Keep going, because you will find that property eventually.
Oh, absolutely. Make sure you're qualified. And if you've got a pre-qualification and it's older than 2 weeks, 3 weeks, you need to make sure you ring out and get a phone call, because the rates have adjusted. Therefore, that's going to change your buying power. And if you don't know what I'm talking about, call me so I can get you squared away.
Yeah, absolutely. Good point on that one. Something to keep in mind: in 2021, last year was a record year for sales. I don't know if people know that or not. It's a record year for sales. So, you know, it's no surprise that we're down 7-8% this year for the first 4 months of last year, but we are actually on pace for another record sales this year. So I don't see the market crashing, in my opinion. Home prices are up 8 to 12% over last year, and they're going to continue, like we said last week, you know, over the next 3 to 5 years.
That is so different from the old days.
Yeah.
God, you know, I used to make fun of all the old guys who were like, well, back in my day.
Right.
I'm now that old guy that's like, back in my day, it's not how it was.
Exactly. Yep. So I don't know what you're hearing, but I'm hearing people I talk to every day saying, I'm going to wait.
Yeah, I mean, well, okay, so you're opening up a can of worms with me. Come on.
Go ahead.
So
you're going to get the doctor today.
The political platform, I'm always going to talk political platform, because I don't care if you're on the left or the right, if you're in the middle. You're still paying the same thing we're paying. You're still feeling the same bumps that we're feeling. It's the left guys, the guys on the left, or the ladies on the left, or I don't know. I can't be political.
You don't want to get me started with that.
Okay, so if you're on the left, you are still feeling the bumps as you are on the right. And if you're in the middle, you're still paying for it as well. So that side of it means nothing. But those pieces, people are like, hey, I don't want to spend all this money. I don't want to get into, you know, making all these adjustments, because gas prices are going up, fuel's going up, 10,000 cows dying in one day. I mean, I don't understand that one.
Yeah.
Doesn't it always
Another
get
podcast.
hot? Doesn't it always get hot in that same time?
Right.
You know, what about the chickens? Did they die? How come there wasn't 10,000 chickens dying?
Who knows?
Okay, so I told you, can of worms. So I get everybody wants to wait, but the ones that are not waiting, that have to move. Oh, I got a job somewhere else. I have to sell, or I have to have a bigger house. Oh, I'm downsizing. Don't wait. Just dive into it.
Yeah.
Get it taken care of, because the rates are going nowhere but up.
Yep. I mean, people say I want to wait for home prices to come down. We've already determined it's probably not going to happen over the next couple of years. Yeah. You know, mortgage rates probably not going to happen.
Yeah.
Anytime soon.
You can go into a good 5-year, 7-year, 10-year ARM. You know, that's not a dirty word. An ARM is adjustable rate mortgage. Puts you in a good position. There's a couple other ones that you can do. There's some HELOCs, home equity line of credits, that you can tie your house up to. Those are pretty cool. I show people how to pay their house off Sonic fast. So yeah, if you're interested in any of those, call me, because I'd love to take care of you.
Let's talk about ARMs for just a moment, since we're on the subject. We didn't really see those over the past 4, 5, 6, 7 years, because fixed rates were so low that it made no sense whatsoever to get into an adjustable rate. So how do you determine a customer comes to you and you're recommending an ARM to them? What are the criteria that you would see to be able to get them in an ARM that would make sense for them? For
me, there's a couple questions. You know, where do you see yourself in 3 to 5 years? Do you know you're going to be changing your job? For me, if you're going into an ARM for a 5-year ARM, where that stays fixed for 5 years and then it'll adjust at that point. So here's the curve. A lot of these companies aren't giving out, I don't want to say not accurate information, but I don't think they're giving all the information. So when you have a 3% 5-year ARM, and it stays fixed for 5 years, and there's a 2% cap, and everybody's like, well, it doesn't change but once a year. No, it can only cap 2% in that year. So if the rates are at 9 and you're at 5, guess where that rate's going? It's going to 7, because it's a 2% cap. It's going to capture. It's going to go right there. They're not telling people that. So me, I want you to have all the information. And if you're not reading the paperwork, then you know, shame on you. Pay attention. And if you don't know what you're doing, you need to call me so I can show you the paperwork and we can go over it in detail so you know you're informed, not just Google. Google speaks in general terms. This is a very specific term. So there's some stuff there you need to be paying attention to. So.
Yep.
Me, if you know you're going to be in the house for 5 years and you're going to make an adjustment, then an ARM is okay. If you're going to be there for 30 years or 50 years and you want to play the adjustment and hope a new president comes in and it's positive and the rates go down and then refinance at that point, you're not coming to the table with that refinance money anyway. And it's all a lot of it, or well, 70% of it I think is tax deductible. I'm not going to say 70% because everybody's different, but there's quite a bit of that refinance is tax deductible, and you're going to be able to recoup that cost anyway. So it's not like, oh, I'm out of pocket like $700 or $1,000 to refi.
Right.
So those are the things. What are you looking like in the next 5 to 10 years? That's what determines whether I want to put you on a ARM. But I mean, I have people calling me, hey, I want to do an ARM. You know, the credit union has told me this. Well, here, I'll show you some paperwork that says that that's not accurate. You know, so you know they can spend $200 and go to a 30-year fixed. Well, can you verify that it's the fixed off of that rate, or is it whatever the market rate is?
Exactly.
Because if the market rate's 9, you're not going to want to go from 5 to 9. You got to now write it out. You're going to take the 7. It's cheaper. Why would you not? So there's some things there you need to pay attention to and look at, and just get all the information.
Yeah.
So that's
good.
That's
thanks for that clarification. Yeah, and your loan officer
can
help you determine whether or not that's going to be. I mean, I know when I was lending, unless the person knew for sure, without a doubt, they were going to be, be moving within that 5 to 7 year period.
Yeah.
They weren't going to be getting an ARM. But I didn't want to be responsible for them to.
Well, that's the thing. I want to make sure that you have all the information. It's your decision, and it's not a bad decision. It's not a good decision. It's just what's best for you.
Yeah.
And that's what you really, that's the biggest piece for me is what's best for you. Let's take care of you first. Right. That's what's important to me.
Perfect. You heard it. Yep. So I always ask people, so what is the cost of waiting?
Oh, wow.
If you wait till next year, and I got to pull this up on a calculator. If you wait till next year, and I give the example of if you have a $300,000 home, it increases the value at the low end of what we're talking about over the next 3 to 5 years, 8%. Okay, so 8% over 300,000. That's what, $24,000 in 1 year.
Yeah.
That's what your equity is going to be in after 1 year. So your home's going to be worth $324,000. Is it worth it to wait and forfeit that $24,000?
Yeah.
In year 2, it's going to go up another 24 at the low end, $24,000. So now you're at $48,000 in equity. So what is it? Who knows what rates are going to be? So you got to weigh, well, how much is it going to cost me to wait and play the waiting game, hoping that rates are going to go down or hoping that prices are going to go down in homes.
Well, here's some of the scenarios that I run into with this, because I have a lot of people say, I want to buy a house, but if I sell my house high, I got to buy this house that's high. So it's like I'm just trading dollar for dollar. Well, yes, in a sense, but if you look at all the pieces to the puzzle, that's where it starts to change. So I'll give you a scenario. So you're in a house for 150, 180, 200,000. You can sell it for 270, 300,000 now because that market is adjusted. Well, your payment is already fixed at that, say, $1,200, $1,500, $1,800. Well, and now you have a chance to stick $100,000 in your bank account. Well, yeah, but then I got to put it down on another house. No, you don't. You can put 5% down, 10% down, 15% down, 20% down. Match your payment, keep the difference in your bank account. Invest that money, buy other real estate, get into a rental. There's so many other things that you should be doing with that money versus just leaving it out there. So just saying, oh, well, I sell it and I make $100,000, then I got to put that $100,000 on this house.
Yeah, it's not a dollar to dollar.
No, you don't. You can pay off some debt. You can make your life a lot easier. Monthly numbers are what's important to me. You getting a 2% interest rate doesn't mean anything to me. But if I can save you $700 to $1,000 a month on your overall debt, that's important to me.
Yeah.
Because now that's like a whole nother job.
Yeah.
I just save $1,000 a month. And I don't have to stress.
Yep.
Yeah. Come on, pay attention. Look at all the little things, because that's what's going to help you. And with gas prices and fuel and food, be prepared. Be prepared for that rainy day. Those old people know what they're talking about.
Yeah. Absolutely do. Yeah. So I mean, and my point is, don't wait.
Don't.
If you have to move, and you've got to look for another home, don't wait because it's going to cost you money.
Yeah.
Um,
Take advantage of the situation. Get yourself in a really good, safe setup,
Yes.
and you can always adjust it later. But you still have all the money. Life gets really easy when you have a little bit of savings.
Oh my gosh.
Right? Every decision you make is not like, oh my God, I don't know if I should. Do I feed my kids or make my house payment? Yeah. Been there, done that.
Yeah.
Not a fun spot to be in.
No, it's not. Yeah.
So for me, let's put you in the best position. How do we save you the most money on the month? How you're not spending and you're working, you're putting money in your bank account, you're saving it, and you're paying your house off sooner. Come on.
It's a no-brainer.
Yeah.
It's a no-brainer. So call me or Phil.
Yeah.
I can't talk today, man. Call me or Phil today, and let's put together a plan of action for you.
Yeah.
I mean, what do they say? Who says it's Zig Ziglar? If you don't have a plan, then it's your plan to fail.
That's a fact.
Yeah. So it's like, let's put together a plan of action for you. Even if it's 3 months from now or 4 months from now, at least you have a plan, step by step of what to do, and you've got somebody that's in the business full time. That's that's been doing this every day. So
yeah, absolutely.
Yeah, give us a call, and you'll have the number at the end of the show down on the bottom of the screen. So
yeah,
cool. Well, about 2 months ago, change the subject a little bit. I had my brother-in-law Pat Beckelhymer in here.
Yeah.
Talking about some plumbing issues. He's a plumber with Pat's Plumbing and Electric.
Yeah.
And it's a pretty funny video. So rather than have him come in because he wasn't able to, I didn't ask him, so he wasn't able to because I didn't ask him. But rather than have him come in here, which I didn't ask, we're just going to go ahead and play that clip. And I hope you guys enjoyed this. But it was actually really informative. Talking about some stuff, things going on around your home that we all deal with plumbing issues.
Yeah, absolutely.
Here's Pat. So I have Pat Beckelhymer here. He's actually my brother-in-law. Pat, thanks for being here. I appreciate it. Yeah, so explain to us a little bit about what a couple of the most common plumbing issues are in a home.
One of the most common ones I probably run into is this one here, the clogged toilet in your house.
Is that what this is for?
That's what that's for.
That thing looks like some kind of medieval torture device.
It's real easy to use. You just take it in here like this. You slip this part down in here in the toilet trap by your toilet. Now it can scratch up the bowl, just so you know, but if you stick it down in the toilet like that, then you start to push it down and you'll want to turn it as you go. And that's usually when you start getting some stuff that you might want to not smell too well. So, you know what I mean? But that's all you do. You push it down there like that through the trap, turn it. That's one of the most common ones that I probably do a lot, and that could cost you about $100 to $150
Holy cow.
to have somebody come out and do that. So if you buy one of these for like $40, then that saves you a lot.
Yeah, I think this one was like $20 at Home Depot.
And that's even cheaper than the one I bought. I got a little heavier duty one, but for a house, you only want to use it once in a while. I use mine at least once every couple of weeks or so. We get a call for one. So.
Cool. Yeah, Home Depot, you can grab one of these for like I said, $20, $40, whatever it is. All right, we're back. Thanks, Pat. Appreciate that. It was great to have you on. We'll send you a copy. Let's talk mortgage for the next few minutes.
Poor Pat.
Pat's Plumbing and Electric. Just remember that.
Yeah.
If you have plumbing or electric issues, you give him a call. We'll give you his number as well.
Hey, he was a good cat, man. He was a nice guy.
He's very very knowledgeable what he does. Yeah, he's a great guy.
Yeah, he was. You got a question? Call me. I thought that was cool.
Very cool. So let's talk mortgages in the next few moments.
Okay.
Because I've had a lot of people ask too. So can you explain the difference between an FHA and a conventional loan, and then give kind of like the pros and cons of each of those?
Pros and cons. For me, that's a loaded statement because what may be a pro for you is a con for somebody else. So that's kind of a loaded thing. FHA is a government-insured program. It insures the loan, right? So the conventional side is your Fannie, Freddie, and it's back-end traded on stocks and bonds and all that.
Yep.
I mean, that's a whole search and video. But that's your conforming rates, like Fifth Third, Chase, all these other banks they're all pushing that same rate. And it may adjust an eighth or a quarter, a little bit here, a little bit there. Your closing cost is what determines, so you're going to pay for a loan, either interest rate or closing cost. Keep that in mind. Call me and I'll go into detail.
So there's no such thing as a no-cost refi.
There's nothing's free. It doesn't work. Somebody's paying for something, and it's just how is it being paid? That's the big piece. PMI. There's lender-paid PMI. Do you think the lender is going to pay the PMI? No, they build it into the loan. So that's across the country, across the world. That's how that works.
How they usually do that? You usually do it with the rate, right?
You do it with the
rate's
rate.
higher.
Yeah, the rate covers the difference, right? So it's money's being spent. It's just who's spending it and who gets the tax deductions. That's a whole nother avenue.
Mm-hmm.
But so the conforming is your lower rates. You got your financing. Your credit has to be in a specific box. 680, 660, 670, 700. Those are your platforms. FHA has been around for quite some time, and it's the government insures the loan. So Option Financial, hey, we're going to give you the money to buy the house, right? So we do a loan, and then the government insures that we get our money back if they have to foreclose on the property. So that's the real difference. The rate's generally a little higher, lower credit scores. You can have some bumps. You don't have to fit in such a tight box. So that's there's a little bit of flexibility. Purchases, conventional is 3%, 5%, 10%, 15 to 20% down. FHA, flat 3.5%, no ifs, ands, or buts. That's just how they do it. You can put more money down, but you don't have to. So there's a little bit of a fluctuation there. Your ratios, your debt ratio, your income versus your debt, that's what determines. Conventional has to be a little bit tighter. FHA gives you a little bit looser. So there's a couple different things there, but honestly, one's government insured and the other one is just flat out lending. Everybody thinks I got to put 20% down for conventional. No, that's where the PMI comes in, and that's premium mortgage insurance, and that's where there's an insurance company out there that insures that 20%. Yeah. So you come to the table with 5% down. That's why you have PMI, and it drops off at the 80%. And so
now FHA, as of 2009, no longer drops off, right?
Nope, you have it forever. So what I do is I put everybody, if they have to go FHA, I put them into an FHA box. We get them into the house. We sit on it for a few months or a year, 2 years, whatever it takes to get their scores up, get their credit fixed. There's a lot of things you can do to get your credit fixed. How to work your credit. It's not just buy and do things, right? There's ways around it. So, that's a whole different topic.
Yeah, we'll talk about that for sure. Absolutely.
So that
very parenting. We could talk for about an hour and a half on that one.
Yeah, there's some really cool things, but so we refinance out of the FHA, get them into a conforming. Mm-hmm. But quite honestly, it really depends on the rates. So because the rates are, one can be high, one can be low. It's an adjustable play. You never know what you're going to get. It's constant. And right now with the society the way it's going, the rates are they're ticking up.
Yeah.
With every bad news, the rates are flying up.
Yep.
So FHA is still a little bit lower. So we work out the payments to, again, I work payments. I want you to be in a payment, not, I want the 2% rate, or I want the 4% rate, or no, I don't care what program it is. What gives you the best monthly payment? That's what's important.
Awesome.
So that's the difference between those two.
Okay. Cool deal. Where's your credit score need to be on FHA typically?
FHA's requirement is 520.
520.
520.
Wow.
Hard to get because the banks have overlays, right? So the banks are like, no, 580 is my cutoff. We're not going to lend below 580. So 580 is really the magic number, but 620 that's the threshold. You get 620, that's when underwriting really flies through, simple. Your pay stubs, everything has to fit. If you have a 580 credit score, it's because you've got 580 credit, and that means you've got some bumps somewhere. And here's the deal. I've had some clients that were like, hey, my credit's amazing. And we go to pull their credit, and it was like tanked. And they're like, no, that's not right. And then when we start digging into it, we'll come to find out the credit report's wrong. And then we have to go in there and spend 2-3 weeks fixing the credit. Yeah, that happens. So
8 out of 10 credit reports have errors.
Yeah, that's massive. That is super big.
Yeah.
So,
some kind of error.
You just don't know. You don't want to be having everybody pull your credit in town because everybody's like, it doesn't drop your score. It does. Mm-hmm. I don't care what they say. The algorithms that they use, it hits your credit score. And, they say, you go buy a car, the dealer is sending it to all these different lending institutions to find the best rate, and credit score drop, it just starts dropping. And they say it doesn't, but how come when I pull credit and I can see, I used to have a 720. Well, now you're at 640. What happened?
Yeah.
Something happened.
Yeah.
So,
I mean, I think I'm not a big fan of, I'll just admit it, I've admitted it before, I'm not a big fan of the credit system at all. I think it's convoluted, it's confusing. 8 out of 10 credit reports are wrong. How does that happen? Who's watching over that?
Yeah, it needs. There's some work that needs to be done on that system.
So I had a chance to sit with somebody that worked at Experian for about 3 or 4 days when I was when I lived in California, first got into business, and it was very eye-opening.
Wow.
Yeah, seeing some of that stuff come through, and it just, I don't understand. So much of our lives is based off our credit score. Anywhere from buying a car to renting a house, buying a house, insurance rates, car insurance rates, home insurance rates, even employment, especially in the financial industry. If your credit score is bad, you probably won't get that job because they're basing that off your credit score.
Yep. Which is not fair.
No, it's not. It's completely not fair.
Yeah. So I think there's a lot of stuff that needs to be changed. I know there's a lot of talk about the credit bureaus being changed. Lenders are trying to get away from the scoring system. So there's a lot of stuff in the works. It's just I don't know when it'll ever.
Yeah, that would take a lot, right?
Yeah. But I mean, you can't have the good old board network. Where you're like, you're a good buddy. I got you covered. Here's your loan.
Yeah.
You can't do that because it's not fair, right? It's not something that can be duplicated.
Yeah.
So our society, we try to be as fair as possible.
Yeah.
So there's credit reporting acts. There's all kinds of stuff that protects the borrower, and some of them are great, and some of them are not so great. But it's good intentions. So.
Yeah. Yep. Absolutely.
So, but yeah, that's a bump.
So what brings us to the next thing is not repairing credit, but building credit. You get a borrower that's like, well, you don't have any credit.
Yeah.
So how do you do that? What are the best ways for you to actually build credit? Phil?
Well, okay, so here's the thing. So you get to there's a lot of credit companies out there. I don't know if I should be naming them. I'm going to, but I don't know if I should.
I have a couple too. I'll throw out there to you as well.
So there's a lot of them out there. You start small, right? You're not going to go out and get a credit card for $10,000. It's just not going to happen. But I want to manage my credit. So when I started making a real effort of managing my credit, I went out and got one credit card and I started building that card. It was I think $250 or $500 credit limit, and I used it. I used it every day. I'd use it. If I had cash, instead of paying cash, I'd use the card, right? And I'd use the card. I'd get it to $500, and then as soon as I got it to that point, I would take that cash and I'd make that payment, even if it was inside that 30 days. Well, after 45 days of doing that, the credit company, the credit card company was like, hey, you know what? Let's raise this.
Raise it.
And then they took it to 1,000. Well, I started doing it to 1,000, right? So you start making that adjustment. As I'm doing that, my credit score is just flying through the roof, right? So you get a couple credit cards, you start using them and paying them off, and you'll see your scores fly through the roof. The trick to a credit card is paying it off before the due date. Don't just use a credit card to use it. Don't do that.
You have to use it. You have to be very
wise.
Specific and wise with it.
Be smart. Don't just use it and be like,
plan
I'm
ahead.
I'm going to use this and then I'll pay it off next month. No, because now the credit card's making interest off of your money. No, don't do that, right? Keep it small. So there's a percentage. And each credit bureau has their own little algorithm to create a credit score. So if, let's say your credit card's at $1,000 limit and you're at $500 balance, you're now at 50%, right? 50% credit used. They have an algorithm, and that's what brings your score to that level. So I think anything around that 30% number is magic. So if you can keep that credit number at 30%, you're going to see your score climb.
So if you got a $1,000 credit limit, put $300 on it and then pay it off.
Yeah, use it, and pay it off. And then try to get 2 or 3. me, I only use one. I have one credit card. I mean, I have several, but I only have one card that I use.
Yeah.
And I pay it off every month. It gets to zero every month. If I don't have cash in my account, I'm not buying it. It's just like I'm poor. Don't have it.
What? Being in banking for 5 years, there are probably 80% of people that can't do that.
I know.
They have a problem with managing that. You know, it's not saying anything about you who's watching, but they have a problem with managing doing it that way.
It's very difficult.
Yeah.
But you have to make a mindset. You have to say, okay, that's what I'm going to do. No ifs, ands, or buts. I now have friends that I have financed, 15, 20, 30 years ago that have had their house paid off, their scores in the 800s, and they're like, yeah, this is great. But it was work. You had to pay attention.
And we both know that we've done debt consolidation loans for people who've had thousands of dollars in credit card debt, and they come back 3 years later and they're in the same spot.
Yeah, you don't want to do that.
In the same spot.
That's not.
Definitely
put
takes
yourself in a much better position.
Takes discipline. Yeah. So I mean, the make sure that, and this is something that I recommended to my clients when I was in banking, but get a secured card. That's probably the best place to start. Secured card basically means you would put $300 to $500 in a savings account, and I'd go to your bank just because you're not paying any annual fees most of the time. If you go to the internet, you're probably going to be paying fees for it on a monthly basis.
There's a lot of them. Do you want me to name some?
Yeah, absolutely, sure.
You've got Capital One, Citibank. Okay, so ran into a little issue here because of my technical skills of audio and video. I really need Bryce. Bryce, where you at, bro? He's our audio guy. So here's the deal. This is going to be on the back end of the video, and we lost the audio.
Like the last 6 minutes of the video.
And I don't remember what exactly we were talking about because I don't have the video in front of me to recap. So here's the deal. I know we were talking about loans. I know we're talking about all kinds of different things when it comes to conventional and all that stuff.
Closing costs. Yeah.
Do me a favor. Reach out to me and I'll go in detail. And we'll do another show on them. So,
all right. Smash that like button. Push subscribe so you get access to anytime we do a new video. So we appreciate you guys joining in. Thanks a lot. Have a great day.
Thanks.
See you next time.